Good morning all together. Welcome to another Flow Show. We write Thursday, 30th of October already. So, as Ryan was saying yesterday, he's not going to be with us for the rest of this week. So I am going to fly solo. Hopefully, I'm not going to mess it up. Before we start and dig into what's been going on, which is nothing really, nothing happened overnight, as we know. No, just joking. Just take advantage of our offer that we have on our trader funding programs. Using code SPOOKY30, you can enjoy 30% off all plans that we offer. Also, depending on the account that you would take, you can also enjoy some time with us in our community. Join us. It's time to do so. Things are on the move. A lot is happening, and our community has been busy over the course of the year really, but especially over the last few days, it's been extremely busy in our chat room, and people are helping each other out there all the time. All like-minded traders just there to help each other out. So take advantage of the TFP and join us in the process. Right, that was for the ad goodies. Let's move on to what has happened to yesterday and today. And yeah, quite a lot has happened. Looking at the euro dollar, you wouldn't think that much was going on, but still a lot has been said, decided since yesterday. So I'm going to try and do it in a bit of chronological order. And let's start with what happened on the over the Bank of Canada. The Bank of Canada decided to cut another 25 BPs, but then basically announced a pause. If things going according to their plans, they look to be in, or at least they think that they are now in a quite good place with based on their base scenario surrounding the economy, the expectations, etc. They still um, think that there might be a risk that there's another quarter of negative growth, but it's not part of their base case scenario right now. Famous last words, maybe. So it seems that stopping at 2.25%, which is taking into account the sticky inflation that they had, but also the cut taking into account that weak Bank of Canada survey that we had the prior week, that was the reasonable thing to do. To me, it seems that they keep just 0.25% right now in the locker, not wanting to use it, but potentially having to use it if they see another quarter of downbeat growth in there. Okay, so for the rest, it was a pretty dull meeting, dull press conference. Not a lot has been really said, which is really news. Okay, the dollar cat dipped. And I will look at the rates a little later, but it dipped a bit on the back of the announcement of the pause, but then afterwards that's been undone once we had the FOMC, of course. In the meantime, before we really move on to the FOMC, we had those crude inventories yesterday out as well, which was a quite big draw. There was a pretty big draw the night before showing on the API as well. It did push, whoops, where am I now? Wednesday. It did push oil up just a little bit. Also, maybe the expectations of the Trump meeting perhaps not going as planned, but afterwards that move has completely been undone already, and we are trading back at relatively low levels, just above the 60 mark on the WTI. And then let's move straight over to the FOMC, okay? Because there's been a bit of a mover yesterday. I was wrong. I thought that the FOMC could not be hawkish yesterday, looking at the shutdown, looking at those albeit still very manageable repo events, but maybe what's to come over the weekend. Not yet out of whether they will be able to stop the shutdown, although there have been some indications that they are going to try and accelerate the talks or coming weekend or towards the end of this week. So this is one that we need to keep a very close eye on for what's going to happen. Some things may be announced over the weekend, actually, if anything. But then back to the FOMC, and the statement, first of all, was kind of as expected with the 0.25% cut. They are now running, the Fed funds are now running at 3.75 to 4%. But then there was not too much of an indication that they were worried about the situation that is ongoing right now. Yes, they took into account potentially still a bit sticky inflation, but still already a bit waning. Yes, they did take into account uncertainty surrounding the jobs market, but then we had Powell's presser coming, and he was not at all convincing to give us a rate cut in December. He actually, while not completely shutting the door, he gives himself time to get potentially data out. But he did pretty much say that the discussion surrounding going forward, which means the December meeting, is far from unanimous and far from a foregone conclusion. So he did fight back quite hard against market's expectations for the next cut coming in December, and he did repeat it quite often. While he walked both sides of the aisle again, as we know, he did point out that it's possible that the jobs situation deteriorates, or that the tariff induced inflation is not going to be as hard as possible, as hard as um, some people may expect. But um, he did say that there was a growing feeling that a pause may be at the order, and that he clearly indicated that there's a big divergence in the opinions of the Fed members going forward. Okay, we know obviously Myran, maybe Waller, who is still a candidate for the next Fed chair role, and perhaps, I don't know, Bowman or so are going to strike a different tone. But himself looks to be on the side firmly right now on the side of a pause, and that of course didn't shock but surprised the market as well, because there was actually no mention at all from the stress, potential stress coming in the shutdown, or not an explicit discussion surrounding, and actually even the reporters didn't really ask him the question, right, about the Fed standing ready to use instruments to help in case that there would be stress in the repo system, or there would be some stress coming from the shutdown. It's probably not completely ruled out, but in the facts yesterday, he didn't mention that at all, and so we saw the dollar gaining some strength on the back of it. We did stop at interesting levels. This being said, in things like the euro dollar, for instance, and then especially thinking about cable as well, which hit an important level and then bounced. But yeah, and then they also announced the end of QT, the 1st of December. That was like maybe a first slight indication that they didn't want to give the market everything that it was hoping for, because the markets, I mean, some market participants were expecting or hoping that they would end QT straight away, but they actually just kept their line that they indicated before, and so the end of QT is programmed for the 1st of December, which was kind of in line with expectations that we had before. Okay, then moving on. What happened next? Yeah, we had a bit of Aussie and Kiwi data out there. Um, Aussie prices coming a little bit off. Um, it's a bit surprising if we see how the CPI has been higher than the expectations this week. And that prices are coming off in Q3 on the quarter-on-quarter basis, but still are coming down a little bit. So maybe that is one of the reasons why Aussie dollar also remains a bit on the defensive. Moving over to the Bank of Japan, and where it was expected that they left everything unchanged, it ended up being a pretty mild, dovish meeting. There were the usual two dissenters, so we didn't get one more. For hiking, doing another 25 BPs hike because Tamura and Takata, they think that that Japan has moved enough out of deflation to proceed with the next rate hike. But all the rest of the participants voted for a hold. Also, in the statement already, they were saying that the inflation situation is not overly clear. Could be sticky, but underlying inflation not really there where they judged it now necessary to hike. And what was kind of filtering through the whole statement, and it's pages long, is that there was no hint at hiking soon. Yes, they said that if everything goes according to plan, they are still on a hiking path, but they didn't say anything specific, and they were actually a little downbeat on those real wages as well. And then we had the Ueda's presser, and he was really not opening the door at all to December, where I must admit that I thought that he would start to hint because of relatively okay data, but he really was saying that he's going to monitor what's going to come out of the next wage discussions, which, if worse comes to worse, is going to push us right into Q1 2026 and actually brush December off the table, because we know that Rengo already said that they wanted another 5% increase. There are going to be more new unions coming out somewhere in November or December, I think, with their demands. But wanting to see what the evolution is and wanting to see what maybe the outcome will be is really pushing back against a December rate hike expectation. So perhaps we need to, and I for sure need to revise my opinion a little bit that December is wide open. I haven't given it up completely. We will see the data, because we also know that last year, December, they surprised us by hiking after just 1 month of positive real wages. So it's not completely off the table, but he did warn against too big expectations in the market that December would be a done thing or a wide open possibility for them to hike again. And we see obviously the results of that in the dollar yen and in all the yen crosses today again. And then that famous Trump G powwow. Okay, um, the main thought there is that we got the best what we could have expected. There wasn't big pushbacks. Yes, there's some divergence, maybe small divergence between the US and the Chinese version of everything, which is a bit logic because the Americans they like to call their victories early and in a bigly way. Oh yes, he said it was an amazing meeting. Um, and they already planned for Trump to visit China, and the invitation is out to Xi to visit the US early next year as well, somewhere in the spring. But basically, what they decided is that China is going to halt the export controls for a year. They will resolve the TikTok issues with the US. That one is being pushed down the road, and also the Nvidia case has been pushed down the road. But they will suspend shipping curbs against the US for a year. They will suspend the 50% sorry entity list for a year, and they will suspend the 24% reciprocal tariffs for a year to the US. And they also promised to buy loads of soybeans, and in return, the Trump administration agreed to reduce tariffs that have been put in place because of that fentanyl, etc. They have reduced the tariffs by 10% to China. A bit afterwards, and that was just maybe half an hour ago or so, or an hour ago, Trump added something that he says that China has agreed they will begin the process of buying US energy as well. And he ordered his energy teams to be meeting to see if such a deal can be worked out. That is something that's only come out from the US side. Okay, we haven't heard anything in this regard from the Chinese side as well. Okay, from the Chinese side. So that is something that's very much up in the air. In the midst of all that, there's always also been a discussion surrounding nuclear, and where China pressed the US to respect all nuclear agreements because Trump, in the midst of all that, had announced that the US will resume the testing of nuclear weapons in order to keep up with the pace of Russia and China. So that's one point where we will have to pay a bit of attention to as well, because we all know that those deals they may be discussed. It may all be roses and sunshine, but when it comes to the hard stuff, there may still be yeah, I mean, there may still be like a discordance upcoming. Okay, um, that's about what came out of that meeting. Oh yes, there was one other thing, is that China promised no rare earth controls as well. So that was also one thing that I wanted to mention. It seems that there has been some kind of promise made, um, although China was a bit vague when they said about relieving the controls. But let's say that for a year, we can assume that China is not going to put too much controls on everything rare earth to the US. And that could be important for another currency as well, which I'm going to look at today as well, which is notably the Aussie dollar. Okay. Elsewhere, because we did have a little bit of other news ongoing and coming closer to home, and that is in the UK here. Starmer yesterday, well, that was a bit expected though, and we know that they are um, releasing those balloons to test what the market and the people are going to say about it all. Is he didn't close the door. He actually left the door open for income taxes, national insurance increases, and VAT hikes in the next budget. That's what he said yesterday in the House of Commons, and then there was this little thing that where actually Chancellor Reeves she admitted that she broke some house rules by renting out her home for a while, and so that may have a little bit of a tail there. If that would come to the ethics committee, we were discussing about that. There was some discussion surrounding this in our flow room this morning, and I think Mark there made a fair point that. Even though we don't have any confidence in reefs, replacement of reefs may be even worse. But just to keep you up to date with stuff that's going on in the UK, and for the time being, we can hardly say that we have a lot of positive news coming out of the UK. Okay, so that's why sterling is one of those currencies that still remains under the cosh. And I think for the main headlines, I am done. So now we can start to look at the rest of data that came out this morning, and we had call them greenish shoots out of the Eurozone. So first of all, we had the French preliminary third quarter GDP doing a little bit better than the expectations. It's still not a it's still not a hard racing for the top, but it is just a little bit better than the expectations. We also had a bit hotter than expected Spanish CPI. Then we had a bit of German, where we had this Dutch. Oh, before I forget, the Dutch actually, they may be in a bit of a pickle to form a government because they had their elections today, and the extreme right and the other DP66, I think it is called, formation. They actually had at a thousand votes close, also exactly the same number of votes, but extreme right Wilder has already said that he likely will not be able to form a government, so we may um, go back a bit more to a middle ground in the Netherlands. Okay, just this in between, if ever some headlines would be dropping surrounding those Dutch elections. Then we had this German unemployment change, a minuscule improvement there. Unemployment rate remained the same. So yeah, just a little tick better. The Italian GDP though came in a little under the expectations for Q3. It's rather the same level on the year-on-year basis as we had the one before, but a couple of ticks below the expectations. And then we had let me find this one first here. Where is it? Where is it? Where is it? Yeah, here we have the German GDP coming out roughly as expected on the year-on-year here. Okay, 0.3%, still very anemic growth over there, but let's call it growth. And then we had the local states in Germany. The CPI is coming out for October, the preliminary ones, and a bit of a mixed picture. Although overall, we can see here on the year-on-year basis, apart from North Rhine-Westphalia, who had a bit of an increase, and this is a pretty big downward revision, 0.3. But so it came out basically versus the original number at the same. But Saxony was a little bit lower. The other Baden-Württemberg, which is another relatively important one, came in 2.3% versus the prior 2.7%. And then the other big one here in Bavaria came in a little lower as well. We have the pan-German number coming out in about, what is it? In about 2 hours. Is it? Yeah, in about 2 hours. So that number will be expected at 2.3%. Could be bang on the money there, looking at the mixed picture on the local states. And then finally, for the morning, we had the European GDP for Q3, a little bit better than expected, slightly below the Q2 number, but yet, I mean, it's a green one. So let's take the positives out of there. We had the services sentiment also a little bit higher. The business and consumer survey was doing okay-ish, albeit still below that 100 line. Okay, it's still all with to be taken with a bit of caution in the Eurozone, shall we say, because the consumer confidence remains, even having improved slightly, remains deeply in the negative zone, right? That thing has not been positive for very often in the historically. What's next? Do we get this? I'm not sure, right? Do we get the GDP numbers, guys, today? Nah, I don't think so. Can anyone tell me if we get these? I don't think so, right? That we will get these numbers out of the US later on. This looks to be like an official. Nah, no GDP. Thanks, Galaxy. And then we have ECB today, and it's the best telegraphed hold of this century, I think. If they do anything, that would be really the huge surprise of the day, because absolutely all members have been saying that they are happy where happy where the situation is at. So this should, in theory, be a total snoozer. Okay, Lagarde is probably going to spend 1 hour trying to phrase and rephrase that they are in a good place right now. There's also nothing in the data that we have seen of late to make them change their mind. So this should really be a total non-event. All right. And then we have a few more auctions coming on later today. Really, the short end, the bills. Um, could be a little bit of an interesting watch, perhaps, if there is a bit of movement after the FOMC yesterday, and then we have Logan speaking. We also have, I thought, oh, here she goes. We also have Bowman on the docket, but as Mr. Michael Brown reminded us in the room, the blackout period ends only tonight. So in theory, they should not talk about monetary policy. But let's see if they respect the rules over there. Okay, so that's what's going to happen for the next the Fed's balance sheet. Normally that thing should roll off just at a regular pace, because they haven't changed anything to their plans of late. So that should just continue to be an autopilot thing as well. So we have next night Japanese CPI coming out, always going to be important, but the unemployment rate as well. Maybe just mentioning that quickly, because the Japanese jobs market is still very tight. Okay, so these numbers, this one um, should remain around this level as well, and the unemployment rate in the meantime just remaining around the same time too. We've got IP out in Japan. That is a quite a volatile number. You will see that they usually expect the best, and then come back to reality when the real number comes out here. Okay, I don't think that it would change the global picture for the yen right here and now. Okay, that's it. And now let's go over to the rates. Right. FOMC has had the same effect on virtually all currency pairs yesterday. In the euro dollar, we went interestingly just back to that prior low here that we printed last week. and then bounced a little bit. The thing I think in this market is like, yes, the dollar is likely, I think, for the time being at least, going to remain underpinned. I have to add that we are entering month-end flows as well, so don't be surprised to see a bit of strange moves around fixing times. The expectations are for mild dollar sales, but that's the only thing I'm going to say about that, because October is usually not a very big month for one, and we have seen that with all that dynamic hedging, um, fixing times have been a bit random of late. Okay, but just to look at the rates, so 115.7580, just around this level here. That's the nearest support that we are watching again. The bounces remain confined right now. I'm gonna go just like for once on a bit of a smaller time frame. The bounce, as we can see here, has been confined again to the 30-35 zone. Okay, so this is still a little bit of a hinge in the market. We are seeing now a bit of dollar demand creeping back into the market as well, driving the euro a little bit lower. Okay, so for this picture really to change, we should start to move back above 116.5, but then especially above this triple try higher, which is around 65.70. That is really going to be an important level coming out of maybe today, or add tomorrow to it, perhaps into month end. So that's going to be the top side level that I'm really going to pay close attention to. Okay, moving over to the cable, it's still miserable, although we have to note that yesterday, actually to the pip, we've reproduced this low and this low. Okay, this 131.40 is really the magic zone, the magic level. Okay, looking at how sterling is behaving, I think it's still in danger. All right. The sterling doesn't find many friends. We saw on the euro sterling as well that we had this setback yesterday and early in the morning. We were trading below 88, but we are already back above now. Sterling doesn't find many friends, and the way that Starmer and Reeves are. Um, Maneuvering and jiggling around right now. I don't think it should actually find too many friends. But yeah, I mean, we still need to be attentive to this level. Okay, it's a very, very close monitoring. All right, but then on the top side as well, we can't really make any headway. All right, for this turning to turn the ship around, we are going to have to get back, first of all, get back to 132.5 and 132.70, 75, but then in a second instant break it. So for as long as we are below 132 half three quarters, it still looks more likely to me that we are going to see a retest at some stage of the lows. Okay, and then be careful, because if it would really go, whether it be on more dollar strength, but I would say that perhaps even more due to the weakness of the sterling. This thing could actually trade quite a bit lower, add another 100 points, maybe even 120, 30 points back into the low 130s. Wouldn't be an exaggeration if this level breaks, because it is a pretty decent level. Okay, so keep a very, very close eye on the 131.40. And before we move over to the yen, I need to speak about the Aussie. So yesterday already we stopped into that in that 66.0525 zone. Um, it is the zone, as we can see here from those traffic areas, and here this spike as well. It is the zone that needs to break back for the Aussie to get a chance to get back into the 67s. We have seen those moves over the past days when the Trump administration was saying, yeah, they want Australia to cover for the miss of imports of rare earths from China, but we have heard something different, right? Over the course of the meeting that Trump and Xi had overnight. So that explains that the Aussie is trading a bit weaker again. So I was bullish on the Aussie. I may become again bullish on the Aussie, but for the time being, I'm going to put it in the fridge. Um, I'm not convinced that apart from month inflows, maybe which could happen here because it's one of the currencies that may be bought. But coming out of that Trump G meeting, I'm let's say going more neutral on the Aussie dollar again. I'm really going to have to see a break of that zone here for it to go back up. So for the time being, I wouldn't be surprised if we just come back here to test 65, 40, 50, and perhaps if things confirm below there, this 65, 20, 25. As I said, I'm neutral. I don't think that there is enough in there to drive it lower because we have seen higher inflation. We still have a hawkish bullock in there. Okay, I'm not ready to sell Aussie as such, but I'm just talking about the circumstances under which it could come a little bit down and the reasons why, which is also partly due to that U.S. Chinese meeting. Okay. Right. And then let's move over to okay. Let's quick word about the Canadian dollar. Look at where we stopped after the Bank of Canada, just below that 139 zone. It is a bit of a level. It's the 38.2 of this whole move higher that we have been building on since really it started in back in July up into October is a 38.2. So if ever dollar cat comes back down here, 138.90 figure is a big resistance. For the time being, we're already back into that 139.45.60 area. Trump said that he had a private meeting with Carney, which went okay, but the market doesn't seem really convinced. And I'm also thinking that lower oil, etc., is perhaps weighing a little bit on it. But it's kind of the market still being reluctant to buy into positives for the Canadian dollar. And let's also not forget that if you just talk about this pair, there is still a 1.5% at least differential between the Canadian rates and the US rates since the Bank of Canada did cut after all. Yen, we are here. We are here. The Takaichi top gave way. Also, the 61.8 of this whole move lower here gave way, and we are now fast approaching this top end of the triangle, okay, of the really bigger triangle, where it's going to be important. This is just above lying just above 154. We are basically at 154 right now. A breakthrough here should lead us to 154 three quarters. And I was saying, like, I mean, it is possible that we are going up into the 156.70, 157.20 also zone as well, providing but with an intermediate stadium maybe around 155.90. Now, all of that is nice and well. And if we look at the 1 day speed of this move, it's not overly um, overly speedy yet. Yeah, we did start from somewhere around 152.10ish or so going into the meeting, or even um, just below there. Yeah, around this zone. We started from there. Yes, we did 200 pips. It's maybe not yet enough to wake up the officials, but they will have been looking as well, and they will see the global weakness of the yen. So we, even though I'm not convinced that we are at the stage yet where they are going to come out of the woods with real interventions, we could see if this level break, we could see this that a bit of a ramp up of verbals because officials have been saying us that they will monitor whatever happens after the central bank meetings. So we had a bit of a hawkish versus expectations FOMC. We had a dovish versus expectations Bank of Japan. This is probably going to push higher, but be aware that those Japanese officials will be looking at those rates. So whether they are going to check rates, whether they're going to come out with a bit of verbal saying that the level is not really reflecting fundamentals. Be careful when they say fundamentals and when they say speculation. Then I would advise to, if you're short yen, to at least take partial profits, because we may be getting closer. Okay, I'm by no means saying that we are going to get there, because for me, the overall picture is still very bullish, and I think we are going to push through if they leave it alone. But just be aware that they may start to look at stuff here, okay? This is a longer period from April to May, but we've seen this, that not only dollar yen is going up, all those yen crosses, and then I'm thinking about the euro yen, etc., are all going higher. And speaking about the euro yen, we're through the prior top here. We are pointing towards the top end of this channel here, which comes in at around 179.10. We are about 40 pips away, which in current context are going to be relatively easily done if we don't get anything specific. And then we are, be aware that this is a calculated rate, okay? But we are nearing into a very, very long-term trend line, which is coming in close to 180 in the euro yen. Okay, so as you can see, there's important levels coming up as well in dollar yen as in the euro yen. For instance, I'm not saying they will, but I'm just telling you that they are kept aware. MOF is kept aware of market flows and market evolutions, okay, by the Japanese banks. I'm just throwing it out there, just in case there something stupid would happen all of a sudden. Right, gold. It's actually shying away right now. Maybe I should even go on the tighter one, okay, because there's been some interesting developments. We held here in that zone. Also, as I said, this is a trend line that, thanks to Ben, that I've put on here, which also comes into that inside that 38.5, 39 zone, right? And around those tops that we saw here, and the low that we printed on Tuesday. Yesterday, after the FOMC, a move lower, and then started to tick up a little bit. And even after the meeting, Trump, where, as I said, it's kind of the best what we could have expected in current circumstances, yet the gold pushed higher to trade around 4,000 again. This is likely one of the markets where we may find some reluctance to buy into everything that's been done overnight, okay? It's going to be a technical thing as well right now, but just we're trading around this zone here, around that 39.75 again here. The logic would want that after what's happened, the FOMC combination with the Trump Xi meeting, that we would actually go a little bit lower. But the fact that we are not yet, we may have to wait for the US session to open as well, because in Europe traditionally we don't do huge moves. But it has to be noted that after that meeting, and then I'm still talking about what's happening in Asia, for instance, they have not sold gold, okay, and they actually found some support to trade back around 4,000. So this is maybe one of the only markets that is going to remain a bit reluctant, perhaps, like for the Chinese compliance towards deals, as we know from Trump version 1. They haven't complied to the deals, but this is more like a case of taking away those restrictions which they actually did. So I'm kind of surprised, confused that gold was still able to trade above 4,000. It should try a little bit lower. So be attentive to this if it would not, okay? Because this is one that could surprise, where the market says like, well, yeah, okay, now we had this. they are still not going to buy enough soybeans or buy that US energy what Trump was talking about. For the slightly bigger picture again, I think we have two very important zones here, and that is going to be, as I said, the 38.5, 39, and then look at this one here, which is now also where the other trend line comes in around 41.10.30. And we also saw that we have been slightly higher, okay, but we have been building tops a little lower here. If that would ever come to here, pay very, very close attention, because this is my make or break zone to resume the top side, yes or no, okay? Um, Ali, for banks forecasting 3,500 to 5,000 for end 2026. I think the banks are with finger up in the air. Really. When it was here, everybody was talking about 5,000. When it's here, some people are talking about 3,500 again. They are probably going to change their opinion every day or every couple of days. Um, and I'm just looking at what you are putting on there. Not a lot apart from that. Dimi, Euronoki, quickly before I close for today. Yeah, I think the Noki is has been very, very sensitive to what happened on Brent and oils of late. We it's a constant try to break that zone here of late, okay? And it's starting to look like it's all those attempts to stay below here on the Euronoki are starting to fail. Okay, um, I would be a bit cautious on the Norwegian kroner right now, because also on the dollar Norway we're finding relatively the same thing back. Okay, I haven't updated really, but if you look at the dollar Norway, all those attempts here, even below 987 and a half, below 997 and a half, below 997 and a half, I had it marked as a pretty important level. We are failing all of them. Okay, and now we are already back into a zone which could mean that if we get above 1005, and we may see a little bit of a run higher. I think I have tried it. Well, I was lucky to take profits on it, but I have tried it, and I must say I've given it up right now, because I don't like this picture what I'm seeing in the Norwegian krona. And then just to please Hannah, um, silver, it's on the one hand, it's in the middle of nowhere. On the other hand, I said yesterday this rallied a bit further than what I expected. We are in the middle of this 48 and a quarter, 47 and a half zone. For as long as we are in the middle of there, I would say not telling me much. But then it's a bit similar to gold, and we know that silver can move faster. We have two outside zones here, which are going to be important for the short, if not medium term. Okay, 45 and a half, 46. And then on the other hand, the famous 49.80, 50, 20 also. Okay, this would be psychologically a big break if we get back above there. But in between, I'm very reluctant to do anything at all. Okay, if you want to look at shorter time frames to trade anything in between, like 46 and a half, or these 49.40, even 49 the figure or so, be my guest. But to me, that picture doesn't tell me or doesn't speak to me a lot. I mean, if you have any views on it, obviously you can trade them, but from a technical picture perspective here, that doesn't tell me much personally right now, and I actually don't have a clear view on it. Otherwise, fundamentally either right now. And with that, ladies and gentlemen, thank you very much for joining me today. Tomorrow we'll do it again. Stay safe. Don't do anything stupid in those markets. Don't forget that we have um, our TFP going, as I was showing earlier this week. Also, you can still put your name there on that list to be made aware of all the ForexAnalytix developments. And I think you can actually win TFPs if you sign up. Just go to our homepage, okay? Thank you, everybody, and we speak to you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.